relationship with the bank, like all other contractual relationships, come with certain obligations for the mutual benefits of all the parties involved. Today on Law Express, we take on the banker-customer relationship with emphasis on the obligations of the customer to the bank. This is Law Express. My name is Noella Seidu. Stay with us.
Michael Tepetina is a private legal practitioner who enjoys watching football, reading books, and listening to music in his free time. George Miguel Owusu-Ansah is a private legal professional with a deep passion for various interests. He enjoys pursuing his love for football, music, and dancing in his free time.
Noella Seidu. She's a private legal practitioner and a consistent member of our 3-lawyer panel on the show every week. She also doubles as the host of the show. She likes to play tennis and read.
Thank you, Noella. I think this topic is a very important topic, and I am personally happy that there's an opportunity to discuss it and to let our cherished viewers get to know what goes into the banker-customer relationship. But I think before we progress with our discussion, it is important that we put it into perspective by defining who the main actors in the relationship are. So first of all, I'll start with a bank. Okay. So when we say a bank, what is a bank? So in simple terms, a bank is an institution or a financial institution licensed by a regulator in Ghana, Bank of Ghana, to basically accept deposits, make loans or grant loans, and engage in other allied services. So in simple terms, that's how I'll define bank to be. And so, as I mentioned, you could see that I highlighted 3 main points in the definition: accepting deposits. And so it is important to create that distinction because we have other financial institutions who are not allowed to accept deposits. Okay. So when you go into the law, a bank is allowed to accept deposits. It's very important because it's one of the major pillars of a bank, the functions of a bank. And then when they get those deposits, they turn those deposits into loans. So in simple banking terms, banks are called financial intermediaries, or they engage in financial intermediation. What financial intermediation means is that they take money from people, institutions who are deemed to have surplus cash. They take that money and then they give that money to people or institutions who are in need of cash. So the taking of the money and then on lending it to the other side that needs the cash is what is called the intermediation. So a bank engages in what we call intermediation. But the definition basically is that they accept deposits and they grant loans. That is the traditional definition, even though it has expanded because of
So I see how you've gone through great lengths to let us see the position of the bank as a dignified debtor.
That's correct.
Yeah, in a way, because the bank operates with equity and debt. So equity is what the shareholders put into the bank. So Bank of Ghana says you should have a certain amount of money before you be licensed to operate a bank. However, because you also take deposits, people come and give their money to you. So in that instance, you owe the person the money that he has put in the bank. So you are then a debtor, but not in the traditional sense of a debtor where you owe me and therefore I am chasing you for my money all the time. But I'm more or less keeping my money safe with you. And then when at a point in time when I need it, I can come for that money to do whatever I want to do with that money. So in a sense, as you said, you are a dignified debtor, but you are governed by laws and regulations on how you should operate as a bank.
So a safe but still dignified debtor.
Yeah, it's true. Because, I mean, the relationship is a debtor-creditor.
Yeah.
Exactly.
You know, the relationship between the bank and the customer can be seen on different levels. At a point in time, a debtor-creditor, it could be a principal agent, it could be a bailey, bailor, mortgagee, mortgagor. They are all terms based on the relationship at a particular point in time. But the traditional relationship, as he said, is the debtor-creditor. And that can interchange because where the customer brings money to the bank, deposits to the bank becomes a debtor and the customer becomes a creditor. And then where the money grants loan to the customer, the bank becomes a creditor and the customer becomes a debtor. So that's traditionally, basically, the nature of the relationship.
So now that brings us to the point where we wonder, who then is a banker? So
a banker, strictly speaking, a banker is someone who has gone through the professional, qualification and has been licensed as such. So in Ghana, you have to attend the Chartered Institute of Bankers. You write your exams. When you pass, you graduate, and then you are given a certificate as an associate banker. So in the technical sense, that is who a banker is. But in a loose sense, anyone who works in a bank in a loose sense is called a banker. So even if a lawyer, they will say the lawyer is a banker. But it is important we create that distinction. It is not everyone who works in a bank who is a banker. Yes, those who are the bankers are those who have, we have associates. They have gone through the training and have been certified. And we have fellows. There are some who have practiced banking for so long. They've been in the banking industry for so long. So the Chartered Institute of Bankers grant them the status of a fellow. They don't necessarily have to go through the, the certification process, but it is a recognition given to them because of their practice experience. So a banker, properly so called, is the one who has been certified, having gone through the professional training.
And also, when you look at a bank, it's not just the building with the tellers and then the bank manager serving the customers. There are people behind the scenes who provide additional services, who in that sense will not be bankers, because you have people in IT who make sure that the ATM, the machines are running all the time.
And then there will be the HR people.
The HR people who, and they also have the facility managers who ensure that the security and then the buildings and the atmosphere and the...
So those services are normally called support services. Yeah, we have the core banking job and then those who supported them from behind. Yes.
So basically, a banker is somebody who deals with money and credits, accepts money from the public, and uses such deposits for lending and investment purposes.
That's correct.
In a nutshell.
In a nutshell, exactly.
Yeah. So we have to further take it to
the
main people of the day.
Yes.
Who is a customer of a bank?
So the traditional definition of a customer is a person who has an account with a bank. So once you have an account with a bank, you are deemed as a customer. But due to changes in banking in modern days, there's been a forward thinking in defining who a customer is. So when you read on it, there are decisions by courts which basically says that it goes beyond someone who just has an account, but someone who has a relationship with a bank, such a sense that you can establish a banker-customer relationship. It may even be at a point where the person does not even have an account with the bank.
So currently, the definition, as he mentioned, due to changes in the nature of the relationship, has been expanded to include provision of other financial services. So as a bank, the bank has extended its mandate from purely taking deposits to include other services. For instance, there are investment advice services they provide. You see, there is now a collaboration between banks and other financial service providers. For instance, the banks now collaborate with the insurance companies to do something they call bank assurance. So in that instance, assume there is a customer of the insurance company who wants to buy a policy from the bank. And the bank assurance, what they do is that the bank enters into an agreement with an insurance company. The bank sells the insurance products to its customers. So, or people outside who want to buy the insurance policies who are not necessarily customers of the bank can walk into the bank branches, inquire about it, and have people there enroll them onto those policies.
Or we could further simplify it to add on where a parent could buy this policy for a child, who is not a customer.
That's
of the
correct.
bank.
Exactly.
So the scope of the banking services has been expanded beyond merely taking deposits and granting loan.
We still have not defined the traditional parameters
That's correct.
of a banker-customer
That's correct.
relationship, such that it established that to be a customer, like you rightly said, you should have a bank account, which is like the initial traditional way
Yeah, yes.
that relationship is built. And then there should be banking transactions.
Yeah.
So
Yes.
opening an account simpliciter doesn't cut it. And of course, there should be some frequency in transactions.
Yes, you must not be what we really
Dormant.
call a dormant account, a dormant account holder or a dormant customer. It's a relationship. Relationship goes and comes, so it's hand go, hand come. So you must operate the account in such a way that the bank also benefits from you, also benefits from the bank.
I noticed that in the banker-customer relationship, duration is not of essence. So it's an open-ended
Yes, as soon as you open an
contractual,
account, you are doing as a
relationship.
customer.
And lifelong.
No,
is what is expected.
duration becomes very necessary where the account becomes what we call dormant.
Yes.
Okay.
Because, for instance, under the laws of Ghana, where a customer does not operate his or her account for a period of 2 years, the bank is mandated or required by law
Yeah.
to transfer that account into what we call dormant register in the bank. Now, when that account is transferred, that is after 2 years of dormancy, if the account is transferred into the dormant register, for 3 years, the account will be in the dormant register. After the 3 years, if the customer doesn't still transact business on the account, the bank is required to transfer the money in that account to the Bank of Ghana.
Okay.
What the Bank of Ghana does in this instance of dormancy is that it takes over more or less the position of the customer. Okay, for the money to be with the banks and still be dormant, let it come to the Bank of Ghana for them to have custody of those funds. If later the customer should come to the bank for the money, they will follow the processes
And then call
outlined
back
under
in.
the law to come for the money. They call it to claim for
Okay.
the money. So time is, I don't want to say that time is not of essence or the duration is not of essence. It is of essence because the parties can terminate the transaction. Once they terminate it, it means at the point of termination, there is no contract between the bank and the customer.
There is a
again.
quote by Sir John Paget which suggests that to constitute a customer, there should be some recognizable course of habit
Okay.
of dealing in the nature of regular banking business. I don't think this would hold true entirely in our current evolution in the banking space.
Yes, I mean, so just to throw this in, by the laws, we now have a law that protects depositors
Okay.
to make sure that when you deposit funds in the account in a bank, your deposit is protected. So the banks are actually required to take insurance on deposits, so that your deposit is insured and is protected.
Is this as a result of the banking crisis?
Well, the law was passed in 2016. Maybe it was
Just
forward-
not being that active. It was forward thinking.
Forward thinking in that regard. So it met it at that moment in time. But
Yeah.
it's just to assure customers of banks that your deposits are protected. And as you said, the BOG is always at play to make sure that monies you put in a bank are always protected. And whenever you are ready to go for it, you will get it. So in a way,
Until the insurance entity can deliver, then what happens?
The insurance entity, well, the insurance entity will only come in where the bank is unable.
That's
Yes.
my point.
It's
So
unable to meet
assuming
its
that
obligation.
happens, and
So it is not necessary. You see, the Ghana Deposit Protection Scheme has established an office on its own. So it is not our normal insurance, like car insurance, go and
Yeah.
insure with. No.
Yeah.
This is a special creation of law,
yeah.
which, as a result, as you said, even though it started in 2016, but the understanding is that it became very relevant after the banking crisis
Yeah.
in 2017. So what it means is that you could see that one of the major anchors of banking is trust, where customers believe that when they go to the bank, they can get their deposits.
yeah,
So what the bank or the Parliament of Ghana, who passed the legislation, wanted to avoid is run on banks, where a customer will go to the bank, I can't get my money, and therefore the news will go out and all customers will want to go to the bank to withdraw them. No bank can stand a run. So the deposit protection initiative was brought on board so that in the event, whether likely or unlikely, in the future, that there is a similar crisis, the depositors can go and get their money from the scheme. So it is not like an insurance company outside which is insuring but there is a scheme created for it.
Yeah.
Except that there are limits as to how much you can get. So it is not the case that if you have 200,000 in your account and the bank collapses, you can get the whole. No, there are limits of insure. There is an insurable limit. There is an amount that has been insured, and I believe that will be a topic for
insurance.
It's a
for us to
whole
handle.
convo on its own.
Yes.
So we've established that the banker's duty, is fiduciary in nature, and they are bound to act in the best interest of the customer, and to use reasonable care, skill, and diligence in rendering these services.
Exactly.
Very high standards for the banker. Let's put the shoe on the other foot and ask, what then is the responsibility or duty or obligation of the customer to the bank?
Okay. So as a customer, the first duty is to exercise reasonable care when it comes to drawing checks on your own account.
Yeah.
So what it means is that you have an account, a current account. You've been given a checkbook. You can issue that checkbook to a third party to come and withdraw money from your account.
Yes.
You have to ensure that in drawing the check, you do it in such a way that you don't leave spaces for fraudsters to take advantage of. So that, for instance, I know there are some people who have checkbooks and they will sign all the leaflets.
Yes.
Oh my.
Yes.
And they give it to their PAs or their accountants to
when you
hold.
need money, you go and
Blank
withdraw.
checks.
That's
Yes,
it.
exactly.
So where, let's say, the one
They must be
unscrupulous PA or accountant takes advantage of that, and they fill any amount they want.
Yes.
Once it comes to the bank, there are certain details that the bank must take note of.
Yeah.
If all those things are present, they can pay, and you'll be in trouble. Because the first thing the bank will look out for is the signature, the mandate,
The
or
mandate,
what is
yes.
called the mandate, the signature. If the signature matches the mandate,
Yes.
the date, everything is intact, the amount written there will be assumed to have been written by you.
Unless it's way beyond what you actually have in the
In your
account.
account.
That is
Exactly,
correct.
yes.
That is correct.
That's correct.
So the first thing to do is to protect your own money, is to make sure that you draw your checks with reasonable care, not anyhow.
I know you're about to skip to the next aspect of
Yeah.
it, but to add on to that, how about taking steps by reinforcing the mandate in the way that you leave information such as confirm all checks?
That's
with
also
me.
another way of protecting your funds. So
Okay.
some banks have other means of confirming the check. So they have what you call you leave an indemnity.
Okay.
So you have my account, any amount beyond
5,000.
5,000, call me to confirm. Any amount beyond 10,000, call me to confirm. If I send an email and it's within this limit, comply. If it's above this limit, confirm. So that's also another way.
But it doesn't stop the small trickles of funds from going away.
Yeah.
If you say beyond 5,000
Yeah.
and this person has enough leaves, they will just write for 4,000.
But that is it.
Yeah, so that will kick in the bank's obligation, which we are not discussing today. But
Okay.
if as a bank you see an irregular activity on the customer's account, you're also obliged to notify the customer that I've seen a series of 4,000, like in the last 4
From
days,
the same person.
which is irregular because your account usually you don't operate in such a way.
Yes.
So can you confirm if that is you? Yeah, but as a customer, your duty is to also make sure that you don't leave your leaflets or you don't put in such a way that someone can add on to it. And I mean, we have moved on mostly from checks. So it also applies to digital banking.
No, checks are still very much at play.
That's for the
You
rich
would
people.
prefer
The rich
paperless. You prefer a paperless situation.
Yes. Yeah, but I mean, just also to protect your funds, also make sure that your ATM pins
Okay.
and your internet banking codes are also protected. You don't leave them anywhere so that anybody can pick your ATM, go withdraw money on your
Even
account.
your mobile money
wallet,
correct.
yes,
wallets
exactly.
that are connected
Yes.
to the banks and
Exactly,
all of that.
yes.
How about the signature? Do you have an obligation to have the most sophisticated signature?
No.
But this is something you're doing for yourself, such that it's not so easy.
So, I mean, the signature issue takes me to my second point.
Yes.
Under the duties of the customer. That leads to protection of their own funds. The other one, or the second one, is that the customer must inform the bank immediately their checkbook gets stolen or they become aware that their signature has been forged.
Okay.
And this in banking law is called a Greenwood duty. Greenwood duty. The first one is called Macmillan duty. Yeah. So what it means is that, and these are cases that have been held. Yeah. They've happened before, and the courts have had the cause to determine those matters. What it means is that you have your checkbooks with you. If it gets stolen, you have a duty to inform the bank, so that the bank will be put on notice that, okay, this checkbook is missing. So anytime a check leaflet is presented to us from the said checkbook, we'll know it, and either we'll call the owner or we'll return it. And also, there are instances where signatures are forged. You mentioned signatures. Yeah. And I know why you mentioned that signatures should be sophisticated. There are some people who will sign so that nobody can copy it. Yes. But you see, some people are also smart. They can copy your signature.
Anything, regardless.
They will forge it. They will forge it, and you won't know. So there are instances where some of the customers become aware, especially, for instance, a husband and a wife, like the Greenwood case I mentioned, for instance. Yeah. A husband has an account, and the wife was signing his signature and was withdrawing money. Exactly. He was aware, but he didn't inform the bank until later on, when there was an issue between him and the wife. Oh. He went to the bank that somebody used for signature to withdraw from my account, so pay me my money. And when it was realized it was the same wife and he was aware, he couldn't get anything from the courts. So you have to quickly inform the bank if you get to know that somebody has forged your signature.
So the moment you know,
or
you have reason to suspect.
The moment you know.
Yeah.
I noted that one. Yes.
The moment you know. Maybe you like
the
to
notification
add,
period, like it should be within reasonable time. And the moment you get to know of it, you shouldn't wait and say, oh, I'm waiting. No, as soon as you get to know, call your relationship manager, inform, okay, I suspect this, or this has happened. So can they put in place measures to protect my money with the bank? That's
okay. So now maybe we'll move on to the duties to compensate the bank, or let's say the duties to compensate the bank.
Well, beyond that, let's go for a quick commercial break.
All right, sure.
When we return, we delve into that. Don't go away. This is Law Express. To your first leg of the conversation in terms of the obligations owed by the customer to the bank, and the things you ought to do to protect your money, I think we need to mention the importance of honesty and being forthcoming with information where necessary. I mean, if you have reason to suspect that somebody is playing with your account, and you're not honest enough to say, yes, I know this could be a family member, for instance, and you cast the net wider, whereas it could have been easier to say, look, this is the person I suspect, so anytime he shows up at any of your branches, check with me. You make life easier, more difficult for you, and you make it easier for people to steal from you. You can now proceed with your next
so
point
just to touch on, and I'll leave the other side for George to come in. Now it is not necessarily only checks. Almost every bank sends text message on transactions happening on your account.
And emails.
So assuming you receive a message that a certain amount of money has been withdrawn from your account, or there is a debit transaction, as it's called in banking, and you haven't instructed
you can explain it.
Transaction, you have to quickly inform your bank that I have observed this on my account. What is happening, so that the bank can also quickly go into their system to check what happened. So just to add to it, that you have to be aware of what is happening on your account when you have text messages coming to you on debit transactions and even credit transactions. The bank can mistakenly even credit your account with somebody's money. That one to just inform that it's part of the information sharing.
Yeah, the honesty.
Yes, that's it.
Involved. So, but if you talk about picking up every debit, and especially those you can't explain, I'm just saying this because there are people you could write a check for, and instead of cashing the check, they go and sit, because they have a 6-month window.
Yes.
They go and sit with it for 4 months, And then when you long have forgotten that you issued that check, then one day you just realize that virtue has left your account. Then you call in, but in that case it will be
but it is
crying
always,
wolf.
it is always good that you call.
Okay.
It is always because there are some checks that have been drawn long time ago, but they were presented at the time your account was not well funded to meet those checks. So it can throw your account into debit.
Yeah.
Debit, and that's another
issue. So it is always good that whether or not, I mean, you remember you issued the check. Yes, that's why we have relationship officers. Now every bank has a relationship officer assigned to your account.
Yeah.
So quickly call the relationship officer. I've observed this money has left my account. They can go into your account and tell you it was also a check issued to Mr. ABCD on this day. You say, oh, okay, I remember. That is always better.
So it's better to err on the side of caution.
It's always better to err on the side of caution.
So when I will follow up with the second obligation from where you left it. So in the instance where you issued a check, the person didn't present it on time. So the time the check came in, your funds are not enough to pay. And so your account is overdrawn, or what the banks called overdraft.
Yeah.
So now there's a negative on your account. So now in a sense you owe the bank now because they have paid more.
It's collected an involuntary loan.
Exactly. You are obligated to make sure that you repay that amount back to the bank to put you on an equal pedestal, or even you go above the limit. And in most cases, with customers who will pay the accounts on regular basis, they may have an overdraft facility on the account. So there's an agreement that, okay, you can overdraw on your account up to maybe 5,000 cedis every month, or 5,000 cedis per annum. So depending on that, if that is already set down, there's an agreement to that effect. That one, you are not obligated to put the account back in its normal state.
So that amount, it is not forever. There is a time frame you have to regularize it. So sometimes they will say 90 days. Clean up. You have to make sure if it is in debit, you bring in money to throw it back to credit. So when we say debit means you've overdrawn, you've taken out more money than you've brought.
Yeah.
Credit means you have brought in more money and that you've overdrawn. So there is a certain balance in the account which is for you. You have to clean it up. Where you are giving what we call a term loan. A term loan is not like overdraft. That one, they will give you the money for, let's say, for a project or to engage in a business. And they'll say, okay, this money, they will give it to you at once. Use it for the project, or they will disburse this in accordance with an agreement. But you are supposed to pay it every month, this amount of money. So normally the salary loans is more like a nature of a term loan, because they give you a salary loan for, let's say, 1 year. And then you pay with your salary, a part of your salary every month.
Yes.
If you're a customer, make sure it is your duty to ensure that that obligation is obeyed. Don't go to the Controller and Accountant General's department and get them to change
your information.
where they send your money.
Your
salaries. Yes.
Yeah, or in banking, it is called the domicile. Your money, your salary is domicile.
Salary account.
They shouldn't change it from that bank to another bank. You have a duty to ensure that the money comes. So
I like how you're stressing this.
Yes, because
I mean, as a lawyer in-house in a bank, you're just saying honor your debts so we can get richer and I can get all my benefits.
Yes,
well, that is not the case. You know, if you don't pay, there are other people who also need those services. But once you fail to pay that money, the bank will not be encouraged to grant similar facilities to other people.
So I know this dovetails into the plea by the banks to use your account, transact with your account, and pay your debts.
That's it.
Exactly. And as I said initially, the banks run on debt and equity.
Yeah.
And the equity is the shareholders' contribution, and it's not that much. So the money that the bank is giving you is part of the deposit that your fellow customers have brought to the bank. So it's not the bank's money. So the notion that, oh, the bank has money, let me go for some, I won't pay. It's not, it is every individual in Ghana who has put their money there and the bank is using to operate. So it is not the bank's money that you have taken and you are not paying. You are not paying your fellow brother or fellow sister's money. So as an obligation, you must pay so that tomorrow Kofi can also go for some money to run his business, and then we all progress as a country.
Great. We sampled people's opinion on the streets, okay? I know we are nowhere near exhausting this conversation.
Sure.
But let's hear them out to just understand if they totally get where the drift and the essence of the conversation. We react to that and then we continue with this aspect of the discussion.
All right, sure.
I think one major obligation of a customer to a bank is to provide accurate information in terms of, your emails, your address, because the bank will one way or the other trace you or get access to you through that information. So the customer is, expected to provide the accurate information to enable the bank to, to make their work easier.
Okay, the obligations of a customer to their bank or banks is they are supposed to make their money available for the bank to be able to save it for them. And they are also able to take loans from their banks to do their business, to enhance their business. They are entitled to do investment in the banks to also get interest. So that's some of the obligations of customers to their banks.
I am obliged to go by the policy of the bank and also do whatever things that they ask me to do so that I can be safe, and also they can also do their possible best to keep my money or everything that I'm doing with them safe.
Right. For me, I think that one of the obligations of a customer to a bank is that when you have taken a loan, you have to repay before the deadline, because the bank belongs to many people, and many people are in the need of the money. So if you are holding the bank's money, somebody else will be in the need, and that makes things very difficult. So I think respecting the deadline is an obligation to a customer towards a bank.
These are interesting perspectives, and I mean, you will see the energy and the interest in whatever they are saying. And you will see most of them are talking about loans, paying loans. So as I mentioned, you will see that if you take loans, you have to pay so that the bank can get your money to also grant to another person. And as George rightly said, the money is not for the bank. It's the customer's money that we are, as I said, financial intermediation. We are, changing and using it to give you loans. So you have to pay so that they also get their money when they come to withdraw. Somebody made mention of the fact that one of the duties is to provide accurate information. I think that is a very important point, extremely important point, because sometimes when you go to a bank and they are asking you for certain information, some of them become very frustrated. They think the bank is asking too much.
Especially where they ask you to draw a map.
Yes,
leading to your home with all the landmarks.
You see, let me tell you,
we have digital addresses.
No,
now.
They are part of what we call KYC. KYC is know your customer. As a bank, per regulation, so that will bring me to my last part. I will mention that as we go on, as to the duties of the customer. Per regulation, a bank must engage in a KYC on every customer. You have to know your customer, so that when the regulator comes to find out from the account opening pack, and the account opening pack is a folder containing every information on a customer. They must find out that indeed you ascertained the residence of the person. Because aside the fact that it could be used to trace, the customer, there are instances where a customer may die, and you don't have any trace as to where he lives, or you don't have any trace as to even who you should get into contact with.
Next of kin.
There's something called next of kin. And those people are needed for purposes of information.
Especially where perhaps family members don't live in the country,
exactly.
or they do not even know that he or she has an account with the bank.
So providing accurate information on your residence, your residential address, your next of kin, your email, all those things help the bank to get in touch with any other person in the event that it becomes very necessary.
And also in operating accounts, the bank try to group the customers. So we have high net worth customers, we have salary customers. So
you have politically exposed.
Exactly. So in operating the bank in itself, this information helps the bank in grouping you and giving you tailored services due to your information you've given them. So you are a politician, you are classified as high risk because of your position. You may lose your power, you may be fired, you may be dismissed by the president or whatever within a certain period of time. Giving that information helps the bank in relating to you. So if the bank is giving you a loan, you know that, okay, Mr. Kofi is minister. He may lose his job in the next 2 years if a new party comes in. So I will not give him the loan beyond those 2 years that I am assured he's getting paid for work that he is doing.
But there's even no assurance,
There's
because
no assurance,
even
yes.
with his party in power, he
Exactly.
could be removed.
And also, it also helps in anti-money laundering regulations.
Okay.
Because if you tell me you are making this amount every month, and then suddenly I see that you are getting dollar inflows that are beyond.
Maybe they won the lotteries.
Yes. So, yeah. So that is a possible explanation.
Or there was a windfall in
Yes.
some
Well,
business deal.
Yeah, if
but-
I may, yes,
yes.
I mean, as he was saying, so that he's entering into the third
Okay.
Yes.
segment
Okay.
of
Okay.
regulations.
So maybe we can go in there.
So now we've dealt with to protect the customer's own money.
Yes.
We've dealt with one, to compensate the bank for its services to you, and two, to repay your loan obligations.
Exactly.
The third one is regulation. You see, banking is a regulated industry, highly regulated. I think it is one of the most regulated industries you can get in this
Yes,
country
about
and
money.
beyond. And now, because of fraud, because of criminal activities, and all these criminal activities either are funded with monies through the banks, there have been a lot of guidelines, regulatory guidelines. The AML, anti-money laundering, and we call it AML/CFT, anti-money laundering and then counter financing of terrorism guidelines. They are very onerous for the banks. So what it means is that at the account opening stage, we mentioned something called Know Your Customer, the KYC. The bank is supposed to get as much information as it can get
Due
at that
diligence.
stage. Yes. To the extent that if somebody is opening an account, and as you said, the person is a politically exposed person, the person is supposed to be ranked at a certain risk level, high risk level, that this person, we have to monitor the inflows, whether they are benefiting from their position in a certain way.
Yeah.
And then, for instance, when you have somebody who is always transferring money outside the country to foreign bank accounts, you have to know what to do. And then banks are also supposed to report to the Financial Intelligence Center, FIC, if they have some suspicious transactions on it. And all these things can be done through the information they gather, mostly at the account opening stage.
So what you're saying is customers should arm the banks with enough information
That
to
is it.
spy on them for the regulators and for the states.
Not necessarily.
That's it.
Not necessarily.
And
You see-
I'm putting it in these blank terms because that is how the everyday customer feels. Why should you know everything?
Yes, and even recently when BOG insisted that customers update their accounts with their Ghana cards, most customers have refused or are not complying because they feel like, why do you need to know such
They only do
information?
it when
Yes.
they are compelled.
Exactly,
to.
because the Ghana card contains your biodata and everything. So
Exactly.
they feel like
But if you don't, if you don't have anything to hide, if you know that the
Exactly.
source of funds into your account are going to be from legitimate sources,
Yeah.
you shouldn't worry.
The privacy is not about having something to hide. Some people just like their lives
but
to be private.
to assure customers, there's also a data protection agency which makes sure that your information is rightly processed and
But
protected
it's
by
a
the
human
bank.
agency. It's a
It's-
bank,
it
and
is.
the bankers are people who are part of the society. All
mean-
it takes is for some banker to whisper into somebody else's
see-
ears, oh, this guy has a lot of money.
I
You might want to have a conversation.
Well, I agree with you.
about- So it's
I agree with you.
because they're humans at the end of
But
the day.
Yeah,
you see,
exactly.
in every institution, human beings run the institution. Banks are run by their staff, and banks know that these are some of the risks that they can face, where staff can divulge information on a customer to another person, etc.
Especially a PEP.
A PEP.
For
But the issue is that
political-
the customers are trained, and the staff are trained, and they sign oath of confidentiality as part of their onboarding process into the bank, and that is hammered into their heads every now and then. So there could be slips once a while. There could be slips. See, it's a human institution.
These are costly
but
slips.
you admit that it is not rampant. You admit it is not rampant. It is because of how the banks take the issue of confidentiality seriously.
It's rather is rampant in my opinion.
Really?
The reason is now we have the personal banker situation. Before, these were not, like, if you needed to interact with the bank, you had to walk in
yes.
person. Now with all these personal banker situation, this is somebody who now individually holds so much information about
yes.
an individual. Before, maybe if I deal with you today, I deal with another person tomorrow, you may not be able to piece together unless you intentionally go out of your way to know the trends in somebody's bank accounts and how they operate. But this is a designated individual to your account who probably has dealings with your account for maybe years, knows your patterns, knows who pays him money, knows who withdraws money. So it becomes a very risky venture at this point from the customer's perspective. I know you are obligated to give assurances that, oh, we have training, we are professionals and all, but these professionals are still humans.
But the Bank of Ghana has also come in.
Yes, there's a regulator. Regulator, and also within the bank itself, there are also what you call risk management policies to make sure that you as a customer are also protected. So there's someone whose main duty is to make sure that any risk that comes with the banking system is monitored and make sure that it is...
I mean, I am just comforted by the fact that you have an opportunity to seek redress in the courts if you feel that your privacy has been breached,
yes.
or some delicate information about your account have been given to the wrong person. It's time for us to go for a quick break again. Just hold your thoughts. So we talked about the requirement of customers being forthcoming with information, especially about their any change in their legal status. Exactly. So for instance, you now owe other people. Is it necessary to communicate this to the bank? You probably, if it's a bank, if it's a corporate client, your directors have changed, shareholding structure is changed, all of those things.
Okay. Yeah, okay, so I think you asked two questions.
Yes.
You owe another bank and then your corporate structure has changed. So let me take the first one, you owe another bank. It is not compulsory that if you have any financial transaction with another bank, you inform your bank. It is not compulsory. It is only at a point where you come to them to take a facility. I hope you understand.
Yeah.
Because we know customers are multi-banked. They have more than one bank account. So if you have a transaction with another bank who doesn't have anything to do with Bank B, you are not obligated to tell them. However, immediately you come there to access a facility, they will ask you to provide them with your other facilities you have with other banks. And also, banks now have a platform they use to ascertain whether or not a customer owes other banks.
Credit bureaus.
And those are the credit bureaus.
Yes.
So a bank is obliged or obligated by law to report to credit bureaus anytime they grant a facility to a customer. And so if, for instance, a customer goes for loan from Bank A is supposed to furnish that information to the credit bureaus so that they can also update their database. And then when the customer goes to Bank B for a facility, Bank B is supposed to go to the credit bureau to run a search to find out the credit history of the customer.
Yeah.
And through that, they will get to know whether he owes another bank or not. And even as part of the internal policies of the banks, they ask the customer to provide information on other debts he has with other banks. So the point is that unless the customer is dealing with you in a loan transaction, they are not under any obligation to tell you that I owe Bank B.
Okay.
And also in terms of a corporate change in corporate structure or board of directors or anything, unless it affects the mandate on the account, such that the board member who has been removed or who has resigned is required to sign on the account and therefore is being replaced, you don't need to inform the bank. So if he's a signatory to the account and he's being replaced, then you have to inform the bank that Mr. Kofi has been removed from the board of directors. He's no longer going to sign on our accounts. He's been replaced by Mr. Yao. So make sure that you make the necessary changes in our information with the bank.
Okay.
If
and
there is a
to add to that,
pre-existing facility and the directors have put in guarantees,
Personal guarantees.
yes, if you're no longer going to be a director of the entity, I think you owe it to the bank.
Yeah, it
to
depends
inform
on
them.
the nature of the guarantee. Is it a personal guarantee or is a guarantee in the form of a director's guarantee?
Director's guarantee.
If it's a director's guarantee, then you must take steps to notify the bank of the change in your status in the company so that it is recorded. And
yeah.
There is this aspect that we can never take out. We talked about a mutual relationship
yes.
based on respect and trust. But at the very heart of this relationship is the requirement of proper communication. So I'm trying to rope in the duty of the client to be courteous in your interactions with the bank, be it in emails, phone calls, in-person conversations. You need to show respect to these bankers who are there to serve you.
Absolutely. And I believe in every bank now they have what we call a customer experience team, or however they want to call it. So the banks are taking steps to make sure that the customer will have a good experience whenever they deal with the bank, either, as you said, through email, phone calls, or even in person. So as a customer, your duty is also to make sure that you communicate, you relate with these people in a courteous way to ensure that they also provide you the services that you require in the nicest possible way. You can't just go to the bank and be throwing your hand around, because you must also know that you're not the only customer they are serving.
Yeah.
There are other customers that they are serving, and you must make sure that you also create the environment that the other customers also enjoy being in the same space with you.
So respect the banking space.
Exactly.
Does that
Absolutely.
require making sure that at least you observe some personal hygiene needs? I mean, you can't just go into the bank smelling like.
Well, that's.
I mean, you're going into a public space.
Yeah.
There are
Yes.
people who work there, other customers. Doesn't matter.
I mean, these instances may happen in certain places. I don't want to mention, but we have branches in places where people trade and people move around a lot.
Okay.
So these places, those people there are trained to handle such situations.
So you're looking at where the location of the bank is?
Yes.
Who is likely to be there?
Exactly.
And probably based on some unique nature of their transactions in terms of their business operations, what is likely to come up as a challenge?
So in this instance, maybe because of the work you do, you may come into contact with things that may smell.
Okay.
The relationship officer is, okay, you don't have to come to the bank and all. I will come to you.
So you don't need to come with all the grease on your body?
Yes, I will come to you, yes. Find a way to make, exactly.
What about people who yell?
Yes, you see, Noella, the bit about the yelling, let me make something clear. Yes, banks, relationship management, they train their team to provide top-notch customer experience. But you see, there is an extent to which the bank can take certain actions or behavior from provocation from customers. There is an instance where a customer goes to a bank, he goes straight to this relationship officer who was eating and pours water into the relationship officer's food.
Wait, where is this relationship officer eating, first of all?
In the kitchen. Here, you know, as I told you, the relationship has gotten to a stage that there are some customers who come, it's more like a family. And so you get access to
But to have
the
access
kitchen.
to the kitchen?
Of course, it happens.
Wow.
There are instances too where customers have come and assaulted staff in the banking halls. You know, a bank will tolerate you to some extent, but when it gets to that extent, it's criminal.
Yes.
And don't be surprised that a bank will get you arrested for such actions.
They
So
owe a
yelling,
duty to protect their staff.
yes.
as
So
well.
these are people who are protecting your own money for you. These are people who are supposed to more or less keep information on you secret. Don't go and provoke them. Don't go and assault them. If you have an issue, if you have a complaint, there are avenues. The branch manager is there, the head of operation is there, the customer service manager is there. Go
You
to
can
them.
even have them changed.
And most banks will sanction their staff if they get to know that there were gaps in their service delivery. But to go and yell in a banking hall is not good at all.
What if the person is naturally loud and this is just their day-to-day voice?
There is a way we determine persons that by their nature. are naturally loud.
The person is
There's a
not
difference between you are
angry.
talking with a loud voice
Yes.
and you are yelling at someone.
Yes.
Okay, so if this person is just loud naturally,
So
And-
some banks have created private lounges for customers. So
Okay.
if you know you are naturally loud, make sure you walk to a branch that
mostly
will
people
provide you
who are
such
loud
services.
don't know because this is their
It's a
normal
normal
disposition.
Yes, so
It's just who they are.
yes, so for a staff who has been trained, once they realize that this is your natural disposition, they'll make sure that they'll move you to a place where your usual way of communication will not disturb the other customers.
So basically, customer care officers should know their people.
Exactly.
When you know
Exactly.
your person,
You
you
know
make arrangements for that person.
Exactly.
Great. We have some questions coming
Okay.
in via our social media handles. Let's try to address those.
My name is Mamiesi from Sakumono. I recently applied for a loan from my bank and was approved. However, I've heard about cases where customers default on their loan repayments. In such situations, what legal obligations do customers have towards banks? And what are the consequences of failing to meet these obligations?
We already discussed that as a customer, you when you take a loan from a bank, you are obligated to repay the loan because the money
There's no free money.
is not free money, and also it's not money that is for the bank. Therefore, you're taking it and wasting it. It's also for your fellow customer who has deposited his money in the bank for future use. So if you take it and you keep it yourself and you don't repay, you are breaching your obligation to the bank and also to your fellow customer, and then it puts the bank in a situation where now the bank has to spend more money to recover the money, that loan that they're giving you from you, which is extra cost. You have to engage lawyers, they have to go to court and all of that. So to avoid all this long drawn litigation, to pay money that you have taken, make sure that you meet your obligations, your repayment obligations. If it's monthly, if it's quarterly, if it's yearly, make sure you meet that obligation all the time.
Yeah, and one advice I'll give customers, you see, if you decide not to pay loan, the recovery process is not pleasant at all.
Exactly.
It's not pleasant. And nowadays, almost all facilities are covered with collateral. Okay, and so banks, and the bank, now there's a law which is called the Brewers and Lenders Act, where banks can go and take possession of your property without even going to court. And so it is always advisable that when you take loan from a bank, you pay. Because the recovery process is not pleasant at all. I've seen instances where a family has been moved from their house by a bank at dawn.
Yeah.
You know, the wife didn't know, the children didn't know, and they were displaced. And so I advise that you take loan, you pay. And as he said, the money is not for the bank. If you look at the structure of the monies banks have, just a little of them is from the shareholders. The rest is from other depositors. So if you take another person's money you are using, you don't want to pay, you should know that when you bring your deposit, a savings account, what we call savings account, the bank pays interest on a savings account. So the bank takes your money and they are supposed to pay interest to you. So when you also come for the bank's money, make sure you pay the loan with the interest so that the bank can continue to do business and support your business as well. Because there are a lot of cases where banks don't want to lend money nowadays because when customers come for it, they don't pay.
I would say that before you decide to take a facility, since it's not free money, you have to be sure that you have a justified reason,
Yes.
a very good business idea, so that you're not just taking the money to consume, to buy a new car, to marry a new wife, or to build a house simpliciter
Yes.
in
You
a
must-
manner that it doesn't bring back any returns.
Yes.
Because you're not just paying back the amount, the principal,
Also
there is
paying
an
interest.
interest. And of course, normally the banks don't say this, but there is some processing fee, which
Yeah.
is also embedded
Facilitation fee,
therein.
monitoring fee.
Yes.
Yes.
All manner of little fees that go
Yes.
back to the bank or are even retained at the point of disbursement.
Yes.
So you must make sure that you really understand what you are getting into and that this will really serve your interest and
That's correct.
purpose.
That's
Now,
correct.
there's also a very important purpose of having a collateral. such that no bank just gives you a facility unsecured.
Exactly.
There is something that you present as a fallback. Should you fail to make the payment, you should know that if you fail,
The bank will take
the
it.
bank
buy
will
it
surely take it.
and sell it.
You might survive if you have a great lawyer who is able to look through the loopholes, but what are the chances? There's also issues of equity. Did you intentionally do this?
Yes.
You know, and you took the money.
Yeah.
So
You are
have to pay.
obligated to pay.
Exactly. It's,
Um,
it's basic. I mean, so you must be assured of your repayment source.
That's it.
You must have a cash flow. Okay.
And have a plan.
A plan. Yes.
Yes. But let's not also take away that, I mean, I am not a lawyer in a bank, so I would tell my viewers that I'm sitting here in the interest of the customers
More. Yeah.
than I would for the bank. You should know that if you are even about to default, there are other options available. You can
Yes.
go to restructure the facility,
Exactly.
especially where there's a just reason.
Yes. Exactly.
So, yes, you've defaulted, but that's not the end of it. Go in. Don't wait for them to come after you. Have a conversation. Explain why there's a default. There may be some things or actions that could be taken to mitigate the fallout on you and your life and your family.
Exactly.
This has been a very great conversation, gentlemen.
Thank you.
Thank you so much for coming by
You're welcome.
on the show. Viewers, today I was joined by George Miguel Owusu-Ansah and Michael Tepete-Nah. My name is Noella Seidu. This has been Law Express, and I'll leave you with this quote, that happiness is a good bank account, a good cook, and a good digestion. But most people tend to stop at the first line, which is a good bank account. Goodbye, till same time next week.